Hello and welcome to the International Economy News for the period between the 1st of June 2025 to the 6th of June 2025. The European Central Bank decided to maintain interest rates unchanged, but warned about future rate hikes. This comes as several Eurozone countries are showing signs of slowing growth. In fact, some are even heading towards recession. But before we discuss that, let's see what other major events happened this week. The U.S. is still fighting inflation, and so far it seems to be winning. Inflation in America has fallen to just 3%. This is the lowest level since March 2022. The core PCE index, which excludes food and energy prices, also slowed to 4.1%, marking its slowest annual pace in nearly 2 years. To put that into perspective, in May of last year, the core PCE was at 4.9%. All of this means that the Fed might not need to raise interest rates further. There is still some way to go until the 2% target is reached, but things are moving in the right direction. It should be noted that wage increases are also slowing, which helps keep a lid on consumer prices. The Employment Cost Index, which measures wage increases for both private sector and government workers, rose by 2.9% over the past year. Back in March of 2022, the index increased by 5.4%. If wages continue rising at a slower pace, it will ease pressure on companies to increase prices. In China, exports fell 7.5% in May from a year earlier, marking the steepest decline since February 2020. Imports also dropped 4.7%, which suggests that global demand for Chinese goods is weakening. On a positive note, industrial profits rose 8.3% in the first 4 months of this year compared to the same period in 2024. But if exports continue to decline, China might need to implement more stimulus measures. Let's now take a closer look at Europe. The European Central Bank kept interest rates unchanged, which was widely expected by economists and investors. However, the ECB warned that there may be more rate hikes ahead due to persistent underlying inflationary pressures. President Christine Lagarde stated that price pressures remain too high and there is no sign of a meaningful and durable decline in underlying inflation. This means that even though the ECB has paused its rate hike cycle, it doesn't intend to cut interest rates anytime soon. And here's why. Consumer prices in the Eurozone have declined to 2.8% in May from 3.1% in April. While this is lower than the ECB's target of 2%, it's still above it. Furthermore, underlying inflation, which excludes volatile food and energy prices, remains at 3.4%, indicating that price pressures are still present throughout the economy. Here's a chart showing the evolution of inflation in the Eurozone, so you can see for yourself how it has been declining over time. As you can see, the rate of decline is slowing down. This is in line with the ECB's analysis that price pressures are becoming more persistent. The bank's worst-case scenario involves underlying inflation remaining at 3.4% by September, leading them to potentially raise rates again. In any case, the ECB emphasized that monetary policy will need to remain restrictive for as long as necessary to ensure that inflation returns to the 2% medium-term target. Germany's wholesale prices saw their largest monthly drop in more than 3 years, falling 3.3% in May due to lower energy prices. This decline is good news for Germany as it eases price pressures and reduces the risk of a wage price spiral. In fact, the decline was even bigger than expected, coming in at minus 3.3% compared to the forecasted minus 0.6%. Input prices for German manufacturers decreased 4.8% in May from the previous month. Energy prices fell 7.8%, while mineral oil prices dropped 11.4%. Speaking of Germany, its factory orders unexpectedly rebounded in May with an increase of 2.4%, reversing the previous month's 2.3% fall. New orders rose 0.8% in May from the previous month, exceeding economists' expectations of a 0.7% decrease. This increase was driven by foreign demand as domestic orders fell 0.4%. France's economic outlook remains uncertain after its industry suffered a setback in May with a 1.3% drop in industrial production following April's 1% decline. The downturn was mainly due to a 2.2% fall in manufacturing output. Economists had expected a slight rebound with a 0.2% increase in industrial production. Nevertheless, the overall picture shows that France's industrial sector has declined by 2.5% over the past 2 months. Italy's industrial production, on the other hand, rose 1% in April, better than the expected 0.5% increase, marking the second consecutive monthly rise. Within the Eurozone, only Austria reported a decrease in industrial production, falling 1.2% in April. This was driven by a 2.8% drop in energy production. And finally, Spain's unemployment rate fell to 13.3% in the second quarter, down from 13.6% in the first quarter, marking the lowest unemployment rate since 2008. The decline was mainly driven by a seasonal increase in employment during the summer months. So as you can see, the overall economic data for the Eurozone presents a mixed picture. While some indicators such as inflation and unemployment are improving, others like industrial production and GDP are showing signs of stagnation or decline. For instance, Eurozone GDP remained flat in the first quarter of 2025, following a 0.3% rise in the fourth quarter of 2024. This lackluster performance is mainly due to weak domestic demand, which fell by 0.2% in the first quarter. Additionally, there are concerns that the banking sector in the Eurozone may be at risk. A recent stress test conducted by the ECB showed that 5 banks, including Deutsche Bank, would struggle under adverse economic conditions. However, the ECB insists that these banks are well capitalized and have access to funding. Despite these challenges, the Eurozone economy continues to outperform its population growth, with employment rising 0.3% in the first quarter and the unemployment rate falling to 6.5%, the lowest level since 2008. Nevertheless, wage increases are putting pressure on businesses, and there are concerns that they could contribute to a wage price spiral. Average wages in the Eurozone grew 6.1% year-on-year in the first quarter. Now let's quickly go through some other important news from around the world. Japan's exports saw a surprising surge of 14.2% in May from a year earlier, marking the biggest increase since August of 2021. This growth was driven by a recovery in the global economy and strong demand for Japanese automobiles and semiconductor-related equipment. Meanwhile, imports also jumped 13.2%, leading to a larger trade deficit of 974 billion yen. Japan's economy has been showing signs of strength, with higher exports contributing to an annualized growth rate of 3.1% in the first quarter. However, domestic demand remains weak, causing consumption to stagnate. As a result, the Bank of Japan maintains a cautious stance on policy, keeping its key interest rate unchanged. India's exports have been steadily increasing in the first quarter of the fiscal year. In April, exports rose 8.7% year-on-year, driven by higher shipments of engineering goods, petroleum products, and gems and jewelry. Despite a 10.4% increase in imports, India's trade deficit narrowed to $10.3 billion compared to $14.9 billion in the same month last year. This improvement is attributed to measures taken by the Reserve Bank of India to curb gold imports. Finally, let's talk about Saudi Arabia. The kingdom's inflation rose to 4.2% in May, up from 3.9% in April, mainly due to higher housing and utility costs. Saudi Arabia has seen inflation remain below 5% thanks to government subsidies, despite pressures from food and energy prices. To support its currency, the Saudi Central Bank raised its benchmark interest rate by 25 basis points to 3.5%, in line with the U.S. Federal Reserve's latest hike. That's it for this week. Thank you very much for watching. Consider subscribing and liking the video if you enjoyed it. Have a great day and see you next time.